Thanks for downloading this episode of the Resilient Advisor Podcast. My name is Jay Coulter, and on this episode, we are going to debrief an interesting report issued by the Investment Advisor Association in conjunction with Cerulli that came out back in May that took a look at industry trends. I'm going to have a link to this report in the show notes, but there was some really interesting data in there that financial advisors, especially at RIA, should be paying attention to. So some key points to consider. Increased headcount at RIAs over the next 12 months, according to this survey, should grow at almost 80% of RIAs in the marketplace, with almost 15% of RIAs expecting to grow their headcount by more than 10%. What this means for you as an investment advisor, team, or firm is it's very important to make sure you're investing capital back into your human capital because your competitors are doing it. Also in the survey, they found that 43% of RIAs that manage money for individuals expect their assets under management over the next 3 years to decrease. Let me say that again. 43% of registered investment advisors expect their assets under management to decrease over the next 3 years. Maybe it's due to market conditions, consolidation, or lack of consolidation opportunities. Either way, if you're a competitive RIA, that's a very important metric to pay attention to. They also found, just as an interesting side note as it relates to how they're managing the money, strategic beta and robo-advice is seen as an opportunity in the RIA community by only 9 and 11% of RIAs, respectively. You know, in most industry publications, we see a lot of press about robo-advisors and the smart strategic beta, and the adoption does not seem to be as high as you'd be led to believe in the industry rags. So that's something worth paying attention to. So biggest concerns for RIAs over the next 2 years is by far cybersecurity, with 63% of RIAs surveyed in this report saying that that is their biggest concern. Interestingly, a potential significant market crisis has 94% of RIAs either, quote, moderately concerned or very concerned. Now, another data point worth considering, only 2.9% of firms believe that their digital footprint and marketing strategy should be a priority over the next 12 months. That is a big mistake, but it is also an opportunity for firms that are seeking organic growth, which is the real growth opportunity for RIAs. There's a land grab out there right now, and there aren't enough financial advisors, teams, and firms trying to grab their stake in the digital footprint space. As it relates to budgets, training, hiring, and retention, when it comes to training, hiring, and retention, 67% of firms are increasing their budgets. If you're not investing in your people, again, it's important to note your competition is. For this year, the top strategic priorities for registered investment advisors. Number one is customer service, with that being the top priority at 57% of those surveyed. That surprises me. Every firm should have customer service as their top strategic priority. Interestingly, coming in at number 4 on that same list of top priorities is succession planning, which is down from previous years and sits today at about 34% of firms having that as a strategic initiative. It's important to note if you're an RIA aggregator out there thinking that your growth strategy is going to be through the M&A space, it's just going to continue to get harder. Of those surveyed, the most important driver of profitability is developing the next generation of talent, with improving services the number 2 driver of profitability. So again, a common thing about hiring folks and developing the next generation of talent. I think that the RIAs are moving ahead of the curve and going to be able to deliver a lot of opportunities for those millennials looking to get into this business. And lastly, the lowest determining factor, according to those surveyed, as it relates to success for an RIA, is having a competitive wealth management fee structure. Fees are just not the determining factor. But number one is firm reputation. So the implication there, if you're a smaller RIA that's branded yourself in a way that you don't think helps build your reputation, now's probably the time to make sure you're putting processes in place to build your brand and build your reputation. I hope you found this quick overview helpful. Please download the full report. It's chock full of fantastic data.